Group 1 Automotive is one of, if not the largest publicly held car dealer in the U.S., and it is an international Fortune 500 company. Group 1 is a publicly held company which was incorporated in 1995. The Houston, Texas Fortune 500 company owns more than 70 dealerships that work through 110 franchises throughout 9 different states across the U.S. Ever since 1977, when Group 1 became first publicly held, they have their own two-pronged strategy with acquiring new dealerships. First, Group 1 targets to acquire franchise dealerships in the attractive business market that will also help pump their pay sheet immediately. Now, the second step to this process is adding what they like to call tuck-ins. These extra added single-point dealerships, Group 1 also is shooting for decentralizing their operations. This means that Group 1 is trying to keep letting those local management teams run the business since they know the market better than the home office would back in Houston, Texas. Some major positives about Group 1 is that they are a publicly held company, which will increase their margins for profit and expansion. Speaking of expansion, Group 1 has actually gone internationally in parts of South America and even the UK as well. With being publicly held, you don't have to worry about investors and offering them portions of power and positions of power as well. Instead, Group 1 is on the New York Stock Exchange, where their stock is available to be bought by the public. Some disadvantages that Group 1 has is that they have to answer to so many people that they are tied to since they are a publicly held corporation. Group 1 also can't set the price of their own stock as private sector companies can. Group 1 has gone from one of the smallest to one of the largest Fortune 500 public car dealership companies in just the past few years. They are booming and doing better than ever.
Hello, I'm Cade, and today I'm going to be talking about Group 1 Automotive's external environment. There are 5 components of an external environment. They are the threat of new entrants, bargaining power of suppliers, bargaining power of buyers, threat of a substitute product, and a rivalry among competing firms. So the first one that we're going to talk about is the threat of new entrants. There is a barrier of entry in the automotive retail industry. Group 1 Automotive joins the likes of many different companies that all provide at least a leg of the automotive retail industry. The second component is the bargaining power of suppliers. Group 1 Automotive, along with many other companies, do have policies providing consumers with some valuable services like hands-on tire kicking access to inventories, which otherwise cannot be afforded and provided by companies who operate strictly online. The third is bargaining power of buyers. The bargaining power of buyers is very real, especially when it comes to buying and financing a car. With so many companies providing the same service, buyers can go elsewhere when the price is not right. The fourth is a threat of a substitute product. As mentioned before, I talked about online services. Group 1 Automotive, along with many other dealerships, has had to recognize that online car shopping is becoming more and more mainstream, especially with the coronavirus pandemic seemingly not going anywhere. With the economy down and dealerships already beginning to add online shopping as a feature of their business for a few years now, how one company makes their site more appealing and identifiable than others is still being learned as the automotive retail industry continues to adapt into that direction. The last component is rivalry among competing firms. As previously mentioned, Group 1 Automotive joins the likes of Asbury Automotive Group, Lithia Motors, Penzic Automotive Group, AutoNation, CarMax, and literally many more, which all provide at least one of the 4 lines of the automotive retail industry. Some companies do specialize more in only one line of the automotive retail industry, but to be specific, Group 1 Automotive, per their website, specializes in selling new and used cars and light trucks, arranges related vehicle financing, sells service contracts, provides maintenance and repair services, and sells vehicle parts. So that is the external environment of Group 1 Automotive. This is their logo. This is a chart that basically just outlines what I just talked about. And then this is actually a picture of Genesis Southwest Houston here in Houston that's actually owned by Group 1 Automotive. So that's what you see here. I know it's like really far away, but that's what that is.
When looking at Group 1 Automotive, the main IT challenge that it faces is one that most companies and businesses around the world have to deal with today: the short and long-term impact of coronavirus. This external factor is one that they could not have foreseen, as we are currently experiencing a health crisis that no one alive has ever seen. The first main issue is that people were staying at home. They were asked to, and hence a lot less people were now out shopping for a new car. This led to a steep decrease of over 35% in sales compared to last year. It is expected that by the end of the year, the US car market will suffer at least a 15% decrease compared to the previous year. However, specifically, Group 1 Automotive suffered a 50 to 70% drop between March and April. This led to Group 1 planning to furlough 5,800 employees globally, with more than 3,000 of those on US soil. Executive pay has been cut up to 50%. CEO Earl Osterberg said, "This is requiring us to take many severe and regrettable actions to resize our business to minimal activity levels in the near term. I believe that the swift and decisive actions that we are taking will enable us to recover quickly when the market recovers, as it undoubtedly will." To mitigate their losses, Group 1 Automotive should take this unfortunate situation as an opportunity to increase their presence online. Their business model should shift as a whole. Group 1 has told their investors that they have seen an increase in online sales through their e-commerce platform, Accelerite. However, they have failed to give specifics regarding how much and the actual number. Even if the coronavirus pandemic slows down and is halted within the coming year, global events will lead to a change in consumer habits. If given the proper resources and time, Group 1 could greatly profit in the long run. By increasing its percentage of sales online, Group 1 would be able to significantly reduce its costs. They would be able to downsize on their employees and hence pay less salaries. Also, they would greatly reduce their overhead with a lot less prime real estate rent needed to be paid, and instead they could just have warehouses where they could house their cars and then provide the online service. Of course, this isn't a recommendation to completely shift their business towards more of an online presence, but it's just a recommendation that they should try to take this as an opportunity to increase their presence online while also maintaining a physical and brick and mortar presence.
Group 1's operating structure relies on a synergistic model, meaning that its different branches are combined to create a value add. These business lines are new and used vehicles, parts and services, finance, and insurance. The Group 1 new vehicle offers 31 brands to its customer base, with over 50 dealerships in the UK, 17 in Brazil, and 119 locations in the United States. These major 3 locations are where Group 1 carries most of its business. Such locations sell brands such as Toyota, Scion, and Lexus, as well as upper and luxury brands such as Audi, BMW, and Mercedes, giving the customer base plenty to choose from at different levels of budgets and interest. Likewise, its used car department carries plenty of choices for different customer bases. These are usually sold at specific locations based on what the sales team and company's intelligent software program notices are the most desirable in certain locations. This leads to better sales depending on location, better prices for the customer, as well as depending on location in the market overall, and this leads to closing more deals for Group 1 and better relations with the clients. Among its used car department, the company has a CPO, a Certified Pre-Owned Vehicle program. The CPO makes over 22% of the company's used retail sales, most of these sales being import and luxury vehicles, which are typically sold with extended warranties for the customers that prefer a higher-end import vehicle, but not at the original new car value. Group 1 Finances and Insurance Department has built relationships with a variety of established lending institutions, allowing the company to offer different payment programs with the majority of its customers leaning towards loan agreements and better acceptable terms. Among the agreements of a customer might benefit from, the company offers service contracts, gap insurance, tire and windshield insurance, allowing the customer to pick as they please, depending on what they believe might be better suited for their needs once they purchase or lease a vehicle from Group 1. Parts and services is also one of the core profitable operations in Group 1's business structure. Part and service accounts for 12% total revenue and 44% of the company's consolidated gross profit in the fourth quarter of 2019, with new and used vehicle sales funneling a lot of new business into the service department. So people buy the cars new or used from Group 1, and most of the time they come back for their service department, parts, insurance, etc. So Overall, Group 1 carries a lot of branches for returning customers and to retain customers as well. With this operating structure, we can see that the business level Group 1 is focused on delivering the best and most efficient customer service experience. Its external structure is designed to keep as much customers base coming back to other areas of its business, not only creating and retaining customer base, but helping the company create higher profits for themselves. From this case analysis, we conclude that Group 1 is flexible enough to handle different branches in the area of business. With over 25 years of exposure to the market, it has a broad understanding of it, yet still able to keep up with the competition. With new business opportunities arising in the online automotive sales market, Group 1 has the business structure to transfer or develop a new branch of their business to the online customer base. Thank you.